So as a real estate broker, my focus is often on probate, which is kind of once the cows get out of the barn, how do you get them back in? And estate planning is preparing ahead of time. Reverse mortgages kind of affect both because you can do a mortgage to the individual borrowers or do it without a plan, and then you have a mess in your hands if something happens, or plan ahead of time. And Brian Bailey, who's a certified reverse mortgage professional, understands the importance of at least doing what you can to prepare ahead of time. So Brian, thanks for coming back on the program.
Well, thanks for having me, Bill. Appreciate it.
Let's talk about the importance of preparing. I mean, obviously, somebody calls you, you call them, they want a reverse mortgage, you can write it up, but along the way, you might notice they own title in their names, not in a trust or something along those lines. What is the importance that you want to look for before you write the mortgage? Make sure they're prepared for what their goal is.
I think as far as it being in a trust, it's not really too big of a deal on our side. We just need to know if it is in a trust, whether it's revocable, irrevocable, and then if that's the way the client intends to close in title with that. The problem has been coming up, at least in my experience, and I haven't talked to the other CRMPs in regards to this, but I think 4 out of the last 5 reverses that I've have had dementia issues.
Ouch.
Sad. I don't know what's going on. I've just seen a serious uptick in that in my book of business and what I've been seeing, and those have had POAs involved. And the problem that can arise is it when the underwriter's looking at it, they want to make sure that a senior isn't being taken advantage of. Like kids aren't coming in or someone's coming in and saying, oh, okay, well, now we're going to make all these financial decisions and bleed the senior dry, without them even realizing what's happening. So obviously we can kind of see what the lender's doing on that. And also they're kind of watching out for themselves, because if lawyers get involved and someone's suing somebody, they just have to make sure all their ducks are in a row. So what I'm finding is that if clients, especially like a husband-wife situation, or even if it's a solo senior with their kids or whoever, having the POA set aside or put together ahead of time, so that way, if and when anything ever happens, then it's kind of smooth sailing. Like, look, the person was of sound mind when they initiated the POA, and then any kind of forms of dementia or, heaven forbid, whatever else it could be comes into play. It's understood due to doctor's letters and such. If that makes
So it
sense.
seems like we live at an intersection of a couple things. One is people living longer physically. So second, dementia seems to be more common. Maybe it's because of chemicals or drugs or something. Who knows why? But it seems like more percentages. I also think third, people are more heightened to it. And fourth, with more money, you're going to have more litigation, and it's just one more vector to attack a transaction if there's an heir who feels that they're entitled to property. And so increasingly, this is becoming an important issue. So now, like me, though, you're not charged with really making that determination, but you are charged with noticing, if you deal with somebody, if something doesn't look right.
Exactly. We can't ever, as a loan officer, we're not allowed to not take an application. We're supposed to take the app. The underwriters are the ones who underwrite the loan and make the determination at that point in time. But as loan officers, we are instructed to kind of keep an eye on something if we feel like there's something fishy going on or whatever. It's our due diligence to make that known to underwriting. But in the reverse space, thankfully, there is another aspect of it. They go through the HECM counseling, and the counselor goes through and they answer their questions, and they're making the determination. There's sometimes where people, maybe they have dementia, but it's a delayed dementia, if that's a thing. I don't know. But on a day-to-day basis, they can handle, they understand what's going on. They're fully within their wits. This is that maybe they won't remember tomorrow or next week what had transpired. So, it's just a whole bunch of different things that can kind of come from that. And then at closing, if title, whoever the notary is, if they feel like, this person really doesn't know what's going on as they're being explained to, that can throw up red flags. So I've had situations where people are trying to slip stuff by me. I find out there's a POA involved in the middle of the transaction, and something pops up and they're just trying to slip it by, and that doesn't do anybody any good. We just need to know what we're doing with up front.
Right.
Having
gone through this with a family member, I know also sometimes seniors go in and out of cognition, right? You might see them more commonly in the morning, outside, fresh air, sunshine. They're a little more with it. And then as they get closer to dinner time, my experience was they would slow down physically, and then that would also slow down mental capacity. And so sometimes you meet with them for an application, or for, in my case, a listing, at 2 p.m. or 1 p.m, they seem normal, but the reality is they're not really all there. It's a debate whether or not it's binding, but nobody wants to be in a debate like that, so we want to turn to professionals where we can. And in your case, the protection that's new is the counseling being required. So expand a little bit more. If I said to you, and I'm in perfect, I hope, perfect cognition today, and I'm ready to move for reverse mortgage, I can't just meet at your office or online, sign documents, put a loan in place. There's a process we have to go through, even besides the paperwork, the appraisal, the escrow, the title. There's a counseling process. Talk a little bit what that looks like physically for a client.
So typically what happens is I get a referral, or a client reaches out. We go through, we collect certain information, and it's pretty minimal to get a proposal together. And then I package a proposal, present it, and if the client chooses to go forward, I've arranged my proposal to have the HEC and counseling documentation up top, very easy for them to access. And then from there, they have a list of national providers that can do it over the phone, and then a certain amount of local providers. Now, local is a very loose term I've seen, because if I have a deal in Yuma or Havasu, that local could be Phoenix, San Diego, Vegas. There's not a lot of counselors, and they have to give them so many. But they can do the counseling over the phone, and in that, the counselor kind of goes through, uses the proposal that I gave them. They have access to it with a code. They go through and kind of explain to the customer and do kind of it's a third party. They're approved by HUD. They're going to just make sure that I'm not a snake oil salesman, making sure that, I didn't promise, that leprechauns were going to jump out of the product, that it's a legit product, and that was presented to them correctly, and that they truly understand what it is that the product can do and can't do. And just like as a safeguard, they have no interest in it. They're just making sure that everybody's on the up and up. So it's a third party system.
Now I've seen, I would call 2 different types of power of attorney. One would be they're taking over, they're in lieu of, they're really your customer, though they're power of attorney for the borrower. It could be a child, it could be an attorney, a professional, but Correct. You're just going to deal with them. They're going to do the business. And then I've also seen power of attorney where, more commonly, I think that's a child where they still want mom or dad involved in the process, but mom and dad aren't signing. They're signing for them as a power of attorney. Do you see that in the counseling? And does the counseling accommodate kind of multiple parties, or is it just one?
So what I find is, a lot of times I don't know what their intentions are, or they didn't tell me their intentions up front. So the power of attorney kind of comes up later on. Then I have to go back to the counselor and say, hey, I needed to add this person on. Were they counseled with you? And the counselor will say, because the counselor will know who's kind of in the room with them when they do the counseling. But I need them to state it on the counseling record accordingly. John Smith, power of attorney, in fact, for Jane Smith, and such. So it does need to be annotated on the HECM counseling sheet, how it's being laid out. That does have to match what the loan docs are going to be. So there's that. In the situations where there's like full control, like you were saying, that's usually when the client's not even really there, or if they're there, they're not understanding what's happening.
Right.
The counselor may, I'm not sure if they do this, but they may be asking, are they there? You know, kind of to have an understanding of what the situation is. But if somebody says they have a POA, I just got done doing one out in California where the POA was set up. The mom had a really quick set of dementia. She had gotten, I mean, through some vaccinations, she found that she ended up with like some lung thing. It wasn't COPD, but it was stage 4 something, and it was bad, where she had to be on oxygen. Well, she went outside to check the mail, and going outside to check the mail, she didn't take her oxygen. She tripped, she fell, she was without oxygen for too long. Dementia went from point A to point Z really fast. But they had just gotten everything set up. So we were within 3 months of things happening, and they were in California and dealing with Kaiser Permanente. That was fun. You know, that was interesting because, and this is another aspect is in when people are setting up a trust, don't, you know, I would say if I was setting up a trust today, I would tell them don't make 2 doctors necessary to sign off on any kind of medical thing. 1 doctor's fine. There's no reason your loved one should have to go deal with 2 doctors. And I think that's kind of something that the attorneys just do naturally. And it makes sense, you know, it does make sense, but I just don't know how entirely necessary it is, because that 2 doctor thing just made things a complete nightmare. Now that was dealing with you know, bureaucratic involvement in a large insurance healthcare system. You know, if you're a small town, you just go down and, you know, you can talk to the doctor very easily, and that's fine. But just something to keep in mind.
So power of attorney, obviously, if it's in place and you have a process to handle that.
Yep.
One of the questions I always have, and I don't have an answer, I just curious your feedback. You meet with a client who is otherwise perfectly healthy, and owns a property and wants to do a reverse mortgage here in California, where probate really is very expensive and tedious, and owns a property in their personal name, or maybe their husband and wife in their name, not in a trust, no evidence of an estate plan. You know, I'm really on a campaign to get everybody to put a plan together, but I imagine doing it while you're also applying for a reverse mortgage, whether it's a purchase or refinance. At some point, just the paper starts to pile on further and further and further, and it gets to be harder for the customer. So some people have a mind to say, yeah, let's get started on it, and, you know, at least we'll have the trust name to title the property, and the reverse mortgage is done with an insured deed. We'll get it done at some point. Or other people say, no, let's follow up afterwards and get the mortgage done if that's what they need the money for. Where do you stand on that process?
Yeah. I don't know. I think doing 2 things at the same time in that situation, I don't know if that's ever a good idea.
Yeah.
I'd say if you're doing the reverse and you're already in process of it, just going ahead and finish the reverse, get that in place, and then you can always quit claim deed the title of the property into the trust. Doesn't really matter what the loan's under, whether it's under both of their names or a single name. It doesn't really. I don't think it really affects the inner workings of how the property is owned. You know, we have non-borrowing spouse. You know, they're not allowed to be a borrower because, say, they're 55 years old, they're not 62. So maybe they're going to be on title, but they're not going to be on the loan. Doesn't matter. Right. So it's nice that we can close the loan in the trust, you know, and if somebody wants to do that, that's great. But I don't think it has any real bearing whatsoever, because with the reverse, you have 6 months, you know, in a situation where both borrowers pass away, or the last surviving member of the loan, even on a non-borrowing spouse situation, has spousal protections. They're still covered, you know. But once that's both borrowers have passed away, or borrower and non-borrowing spouse pass away, the loans come and call and due. They got 6 months to get things figured out, And so I just don't see where that has a bearing. So I would just go ahead and close the loan and then make sure in the meantime you could be working on that trust.
So let's change topic a little bit to kind of general things about reverse mortgages. I know you're one of the most longstanding and serious reverse specialists I've worked with, and we've been this is our third podcast together, so I know you pretty well. Let me just throw a couple of misconceptions out real quick, because whether you're a borrower looking at a reverse mortgage or you're a professional who has to deal with customers, explain these things. There's a lot of misconceptions, more about reverse mortgages, I think, than anything in real estate. So let me go to the first one, which is don't get a reverse mortgage because you'll leave the debt to your heirs.
Yep. Yeah, no, that's not the way it works. It's a non-recourse loan. So what happens is when the loan's called due because they're not living in the house due to whatever reason. It could be living in assisted living, whatever the case may be, or passing away. When that day comes, they are going to call the loan due, and in 6 months you have to either liquidate the house, the loan's going to get paid off accordingly, and any of that money is going to go to the heirs or the trust or however the estate is planned out, if it's planned. And then from there, it's going to be handled accordingly. If the loan is, let's say, it's very hard for this to happen right now, but if it did happen where, let's say, the market just tanked and rates, and the loan was higher than what the house is worth, there's a non-recourse feature on HECMs that allow that to that money gets washed. It gets eaten up by the program, and that helps have protections for the heirs in that case. So a lot of times when they're like worried about the mortgage insurance, that's what the mortgage insurance is paying for. That's protecting you. And then what's really cool too that a lot of people don't understand is the idea that, let's say your house is worth 300, but you owe 400. The heirs can choose to buy the house back at 90% appraised value. So let's say they pass away, that 400, they can actually buy it for the 300 minus 30, so they can buy it for 270,000. In Arizona, California, maybe not as big of a deal, but say a lot of the Midwest or East Coast people who do have generational homes, the kids want to maintain that home that they lived in growing up and such. Right. That's a big thing. That's huge. I mean, who else is doing that? Where else can you get something like that where you can buy a house for guaranteed, 10% equity, right, position right off the bat?
Now, and I think the misconception or the myth comes from the original reverse mortgages where they would lend up to 80% of the value of the property. And then 2008, when housing values went down, there were people upside down. There's still some of those loans in the books where the borrower lives so long that they are upside down. But the new loans being done today, given loan to values, it's almost mathematically, historically impossible to be upside down. And even still, there is a provision you talked about. But I think that myth is really, there were many foreclosures when it was upside down from the original loans done. But I don't think there's any that are done during the reformat.
Well, I think that's another hard part is because of the foreclosure concept. The term
Yes.
foreclosure is so
Yes.
negative and so
Yes.
people freak out. But a lot of time, and when you look at reverse mortgages, the foreclosure rate's super high. It's not because people are losing their homes; they're not even making payments on the home. It's because when somebody passes away and they can't contact the heirs or there are no heirs, they have the lender has to go through a legal proceeding called foreclosure in order to get the legal position to liquidate that house so they can recoup their costs, and then whatever money's left over goes to the heirs or goes to the estate accordingly. That's why if there's nobody there, like, you need to have a plan set up, which is kind of the point, was you need to have something set up or your intentions put down so that way people know what to do with your estate once you pass away. And you're going to give it to the church, then give it to the church or to Bob across the street. Just maybe not your dog, though. I mean, I don't know how that works.
And I think people, you can leave stuff to your dog. I've seen that.
Have you?
I literally got off the phone with somebody who would have said, my parents had a reverse mortgage, it's going to foreclosure. Well, what they left out was that mom and dad, didn't have an estate plan. Mom and dad died over 6 months ago, and they've been living there for free. They left out that they probably got numerous letters from the reverse mortgage lender saying, hey, because the reverse mortgage lender gets notified upon death, they have a social security number, and they get those records. So they've been getting letters for 6 months, they ignored those. Then in this case, they actually filed a notice of default and ignored that for 90 days. And now they're calling an attorney in a panic because they're facing foreclosure. So I think the proper plan is, if you have a reverse mortgage, make sure that people are going to inherit your property. There's a plan in place of some sort. If there's somebody living there, let them know, hey, once we're done, you can't live here forever for free. They're going to call the loan due, and here's what they need to do in order to effectuate that. Either file a probate, or here's an estate plan to do that. So I think that's where it comes from, is the lack of planning. They think they're going to lose the house, and they will. If you die, you're going to lose your house. It's part of the program, unfortunately. Yeah. But you can leave it to your heirs if you do something, or they do something pretty modest, I think, ahead of time.
And that's why I find it very important. A lot of people ask, what part of the misconceptions that you're talking about, or I get because I run the reverse division for Patriot Pacific, and I get a lot of my LOs asking me, what is one of the popular things that people fight back on, and a lot of the concern is the kids getting involved and worried about their inheritance and such. Right. And I don't run into that very much. I'm sure it's happening a little bit here or there behind the scenes. Very rarely do I hear it verbatim, like people are telling me that. But I think more so the kids get involved because they're a little concerned that their parents are being taken advantage of. So every proposal I do, I try to get the kids there. I try to get whoever's involved, if they've got a CPA, a financial planner, if they've got anybody involved whatsoever in the decision-making process or wondering if this is a good product, I want to talk to them. I want them to hear it from the horse's mouth that what this product can and can't do, get over those popular misconceptions, and for people to see, maybe take a little bit of the mystique out of the product, and for them to feel comfortable. Because I tell them, I want them to have my card. I want them to call me if and when something does happen to you. Right. I want them to call me. I'll walk them through. I already made my commission. It's like I have no bearing on it whatsoever, but I'm an LO for life. I want you to come to me and let's help get you through the servicing, and you can't hide from this. You can't have them pass away and just think that nobody will know. Right. For infinity, that's not going to happen. They get notified. You have 6 months. You have up to 2-3 month extensions that can be done as long as you're making a serious effort by listing the property or refinancing and such. But you have to communicate with the lender. You can't hide from them.
Yeah, I find extensions, at least in California, I don't see those being granted anymore. There was a time in the mortgage, the deeds say that the lender may give an extension, but also pigs may fly. Pigs don't fly in California, and you're not going to get extensions in California. That's my experience seeing scores of these loans. Yeah. And I think that if I had a magic wand and I was in charge of the reverse mortgage programs across the country, of course you are maybe for your company, I would make 2 requirements. One is I know there's an annual form filled out by the borrower that confirms it's still their primary residence and some other facts. It's just really, are you still alive? Are you still there? And then second, I think that I would ask the question at that time. So, obviously this loan's good until you pass. Do you have a plan in place for when that happens? And who's in charge of that? And do they know what to do? And I think if you can have that question ahead of time, that person becomes your prospective new customer. And just to go back to something you said before, I think when children get involved, I think originators, get concerned when they say, well, you're eating my equity. I think that's a reasonable question to ask. And it's not so much that they're objecting to the process as they want you to tell them, hey, how does this really benefit me as well as my father? Maybe the answer is it benefits your father so much and it won't help you that much other than helping your father. Okay. Or what helps you too, because by doing this, there's more left over. Okay, great. But I think sometimes those questions from the children that come across as attacks are really just, comfort me, help me understand what this works like, help me understand that my father's not being taken advantage of, or mother, or both, and assure me and show me some verification that you know what you're doing. And if we answer these questions professionally, we're prepared to handle them, I think we're fine. I think when loan officers get defensive and expect things to go smooth, that is smooth. Smooth is when the customer asks you a lot of questions, pointed questions, because they want to know the answer.
Yep. Smooth. What's not smooth is nobody has any questions, and they call you up in 2 days and say we're not interested, and you have no idea why. You don't know where wires got crossed, and that's not good. That's not doing anybody any good.
It's an extra phone call.
I mean, my favorite page out of the proposal is the amortization schedule. Let me show you what your house is going to do in value at a projected 4% over the next, so long. And this is a historical 60 years across the nation. This is what the average is. This is what HUD wants us to use. And we know they're conservative on their numbers. So let's use the 4%. This is what your house is doing. Here's how the loan will perform. Right now, you're sitting on $300,000 of equity, and 18 years from now, you still have $300,000 worth of equity. Like, you know what I mean? Like, yes, you're going to lose a little bit in inflation, but in the meantime, your parents got to sit there and live there with no principal and interest payment. And, they got to buy a cabin up north, or they bought an RV, or, whatever the case may be, enhance their income, whatever the numerous reasons for somebody to use reverse. Yeah. But, when you can get people in front of the numbers, that's where everything comes up. I have a wonderful presentation I do for financial planners and CPAs, but especially financial planners. They love it because it shows on their side, it's part of the coordinated withdrawal strategy that Dr. Wade Pfau helped put together. And it shows where by using the reverse in estate planning, we're not talking about people who, oh no, the sky's falling and I don't want to be a greeter at Walmart, where it's great for them too, because it changes their life, but it also can be used by the mass affluent, who have plenty of equity and plenty of assets, but instead of depleting their 401ks, IRAs, annuities, whatever the case may be, they can, when the market's bad, they can take it from the reverse, and then that helps. When you see it both for the consumer, like this is what their numbers look like, the heirs, because this is what their numbers look like, and then the financial planner, what their numbers look like. It's win-win-win for everybody in that situation. Yeah. And you hate saying win-win because nothing's win-win. But it really, they're after 10,000 some Monte Carlos that they did with this coordinated withdrawal strategy, it passed every single one of them. That's amazing. It's something that people really need to take into account.
Well, because you're taking something that's illiquid and making it liquid, you have more options. More options almost always gives you more. I think we talked about that last time. The power of flexibility in your toolbox is not often that you have a flexible putty that you can put anywhere and make it work. But really, this becomes that to some people. So, kind of moving towards the end here, because you are in a leadership position, where I sit, as an industry, we should be doing about 10 times reverse mortgages that we are, but for the stink of the past reputation, which we have to, remove that one person at a time, and the lack of understanding the product, both by the consumers and by the practitioners. The consumers only see an ad on TV, which I think is misleading at best and kind of slimy in some regards, and yet there's obviously a need for certain types of mortgages, but like you say, the financial planning is more sophisticated, requires a more sophisticated originator, more sophisticated presentation, and at the same time, we have an industry of forward originators who are just, for the most part, the top 10% are doing great, the next 10% are surviving, and 80% are flailing. They're licensed through this product, and so you have this pool of people. Is the next generation of reverse mortgage originators going to be 1 or 2% of that group that take on this opportunity, or will be people outside who have more customer service or financial background and move into this business? Where the next originator is going to come from to help service what I see just an insatiable need for more help?
Yeah, there was a recent move of a large brokerage here. They have moved away from the platform of having their forward or their loan officers being reverse certified, and went more towards the model of like letting anyone do a reverse and kind of leaning heavily on the AEs and different people to help them through the product. And I had one of the lenders sit down with me when we were at the NERMLA event in San Diego, kind of told me about it and said, hey, consider this. And I'm like, no, because I kind of modeled my system after what I had gone through when I got certified at that broker. And I'm like, no, I like that. I like that it takes, you need to understand the product. You need to understand its pinch points and stuff, and how to properly present it, and how to properly use the tools, the software, and to really know what you're doing on that point. And then once you've done that, now we can work together hand in hand. I'm not going to just send you off to one of the AEs to do it. No, I'm gonna walk you through it and give you pointers on whether that's pricing or that's overcoming objections or all that. I think it's necessary, and maybe that does keep us from expanding to percentages that need to be higher. I don't know. I think at the end of the day, the average person's going to take the path of least resistance, like electricity. It's going to take the path of least resistance. And when people are trying to buy houses, it's easy. It comes right at you. When people want to refi, they pick up the phone, they call you. Reverse is a different animal. It's kind of like the financial planning CPA animal, where you need to educate people on what they're doing. You need to help them understand what the product is and the vast array of inner workings of it. And with that, I think a lot of people just don't like or don't want to be challenged with that. And I don't think you're ever going to get to that point if you don't make it a practice. If you decide reverse is going to be part of my quiver, I want that arrow in my quiver, then you will take the time necessary. It's kind of like VAs. VAs have enough nuances that it's not like your standard conventional or FHA loan. You've got to understand the inner workings of the VA. And so with that, you just do it accordingly. I don't know what is going to take the idea for the forward guys to get more involved. I wish they would. I struggle with it. I struggle trying to encourage them to do it, and I get them signed up, and then like to get them to kind of finish it is always a task. But it's this business, realtors, loan officers, title people. It's like herding cats at times. It just can be. But I think that's in every aspect. It's always the 80-20 rule. 20% to get 80% of the business done.
I heard Tony Robbins talk about the Pareto principle, famously 80-20, and he said it's no longer 80-20, it's now 90-10 or 95-5, that the top 5% get all the rewards. And I think to anybody who's watching, if you're an originator considering getting in this space, I'll just tell you my story. 6 years ago, I had to relaunch my career in sales, and I went all in on a niche, and I've been on a pursuit to master that niche in my market area. I learn every day. I meet people every day and learn more, but I know more than almost all my competitors of the niche that I work in. And as an originator, I see an unlimited runway in the reverse mortgage space. But you got to commit to it. You got to learn it. You have to work with the right people, be mentored by the right people, have the right procedures. There's no shortcut. The shortcut is the hard extra work. But I just see this as such a tremendous opportunity. And Brian, I know you do some leadership, and I think you're a great stop for somebody who's interested in that spot to at least stop and make an assessment. Hey, is this for me or not? But if you're going to go with Brian, he's like me, he's kind of old school. There's no fooling around. Like you got to do the work. You got to lift the weights and run the track. There's no shortcut to being fast or strong other than the work. So, Brian, I just appreciate your time with me today. I know that people can reach you at reversefinancial.com is the website, and then we have your contact information as well. So if somebody's interested in either getting reverse mortgage or a professional who has clients to talk to you about an assessment, or an originator looking to make a career change, this is the best way to get in touch with you?
Yep. Just give me the 480-297-8123. That's my cell phone. I mean, it's right here. Call me. I'm all ears. I'm willing to work with anybody on that. I try to be as approachable as possible with all of it, and try to take the mystique out, because I think that's part of the problem. Is there's just too mystique. Doesn't need to be that complicated, but it does require some focus and intention, and I'm willing to hold anyone's hand through that and get people going. So
Fantastic. Well, Brian, I appreciate your time today and previously as well, and what you do going forward. Thank you so much.
Well, thank you, Bill, and thank you for this podcast and everything that you're doing to spread the word.
Well, thanks. And for the rest of you, this is the Reverse Mortgage Podcast. We have a new episode every week, usually with mortgage originators, sometimes managers, sometimes vendors, to learn how to better serve our customers, whether it be we're a realtor, an attorney, or a mortgage originator. If I can help at all, obviously you can reach out to Brian directly. If I can help, reach out to me at Bill Gross Probate. If you like this, subscribe, send me a note. If you want to be interviewed on this, send me a note as well. If I can help in any way. As always, make today your best day ever.